What is going on, guys? Good afternoon. It's your favorite mortgage lender, Abdel Kouami, Got Mortgages. Happy Monday. Man, is it finally elections time. We have finally reached really the point that we've been waiting for so many weeks, but really so many years, right? Elections comes every 4 years, as we know, in our beautiful country. We are going to go over such a crazy, turbulent last couple of really weeks when it comes to the interest rate market, all the various different things that have been happening with inflation, employment. What are a lot of the different opportunities right now as we start gearing into tomorrow, right, with the election? We also had the Fed meeting coming up on November 7th. We saw the data reading on Friday actually came in a little weaker than we really expected. Only 12,000 jobs were created, and they were expecting almost 113,000 jobs, meaning we were off so much. We saw a lot of different updates also when we talked about the jobs in regards to revisions. And that's something that we really need to concentrate on. The data reading is actually a lot weaker. We saw in August and September, and I shared a very short video on this, that two times we saw actually a cut down when we looked at the interest rate and we looked at the number of jobs that were being created. So starting off first, again, we know really a mix of trick and treats, right? Of what we saw. Job growth slowed down, right? Which went over. We saw private sector with ADP role also saw an increase in terms of surges on that. We saw a wage moderation also start to moderate. JOLTS report job opening and labor turnovers once again showed weakness. Remember, when we talk about weakness in the market, less jobs being created, less opportunities, obviously, for consumers to really get employment in the first place. So that also throws a little bit of a wrench. Consumer inflation making progress. We saw some updates when we looked at PCE report, and then we had a big jump in pending home sales, home prices. So much to unravel. When we looked at the BLS report, I mean, this is pretty crazy. When you talk about changes, almost 200,000 jobs, a little over 100, and then we only saw literally 12,000 jobs that were essentially created. And a majority of them, if we really look at it, 227,000 of those jobs were part-time. So if you guys remember when we did this about 2 months ago and we were going over the employment market, 227,000 of those part-time employments were all literally gone. And it was 16 to 19-year-olds that were just basically starting school who picked that up. That is now out the window. We saw a little over 164,000 full-time jobs also essentially diminished from the workforce. So if we really take those two into effect, the unemployment rate in reality actually went up to, I believe it was 4.3%. So not necessarily the truth in regards to the readings. And another big portion of us, what I want us to know is that we saw a consistent revision for both the month of August and the month of September. The month of August, they actually revised to almost 81,000 jobs that they essentially overestimated, and then a little over 30,000 jobs that were overestimated. So that 2 months that we actually saw the employment market was stronger was essentially fake. Now, the BLS report, I think, is not really holding up too much weight as we once thought, because, again, now we're starting to see not too much power, which we're going to look at how the interest rate market has been transitioning, and not too much weight gave into it, and we're finally starting to see a little bit of a letdown. Now, of course, we know that this is going to be a major market indicator, obviously, with the election, whether we go blue or we go red. No matter what, we're going to at least start seeing a little bit of consistency, and no longer will we get that tail as many of us professionals are getting as to, hey, we're going to wait for the elections, not really realizing that the elections in many instances very rarely plays any update. But over the last 11 elections, right, home values have essentially jumped up every single time with just so much pent-up demand of what was out there. Private sector, again, with the ADP report, we saw a little bit of an uptick, right, 233,000 jobs. Majority of it came from larger employers and medium-sized employers. Again, bottom line, although it was a pretty stronger number, we did see that only the smaller employers, which is your typical, right, mom and pop companies, actually only added 4,000 jobs, right? We spoke about the JOLTS report, job opening and labor turnovers. That dropped to almost 7.4 million in August, again showing a little bit of a decline. Remember, it's almost half, right? We're in 2022, over 12 million new employments that were available. It's now dropped to only 7.4. And also an important indicator that we look at is the quit rate, little over less than 2%, meaning people are essentially afraid to quit. And there's a lot less poaching from other companies. I mean, not in the mortgage industry because they're always poaching, but a lot less poaching, right? And fewer people who are feeling confident truly about them actually going out there and changing employments. Consumer inflation, like I had mentioned, we also got the PCE report, personal consumption and expenditure report. That also saw really close to headlines of what we were kind of looking at. We're slowly, really, remember the Fed wanted to hit that 2% mark. We're slowly really reaching closer to that, where in reality, the core PCE was at 2.32. Pending home sales, again, something that we really look to monitor. It's a little lagged, but based on some of this data, again, showing that pending home sales is up 7% month over month and only 2% year over year. But again, recent upticks within the last month, which is great, showing consumer sentiment start to turn. It's really difficult to say, right? For the last 3-4 years, it's almost impossible for us to truly put a season behind this market, right? Because it's been anything but consistent. But usually in the fall time, you tend to sometimes see a little bit of a slowdown. It's not necessarily the case. We're seeing a lot more inventory start to come on the market. And surely, I think after this week, if the Fed does indeed go ahead and cut 25 basis points, and then we finally get the decision on employment and we finally get the decision on updates in regards to the election, I think that'll slowly start to show us just some consistency in regards to that stuff. Third quarter GDP that we have, again, came just below forecasts. Again, the GDP report, gross domestic product, that just gives us a little bit of a gauge on inflation and really what the expectations were with that. You can kind of see economic data in the third quarter really was driven by consumer spending, exports, and federal government spending. That obviously saw a little bit of a shift of what we wanted to. Now, remember, when we're seeing a little bit of these changes, we want to also ensure that what's going to be the updates with the two final month readings in November 27th and December 20th, right? So again, this week, like I had shared, we're going to have the elections come up, but we also want to make sure that we keep an eye on another important data, which is going to be just the monetary policy, right? What is going to be the Fed's expectation on Thursday? Are they going to potentially change their stances, or are they going to maybe kind of give us a little bit of an idea into the near future? Hopefully, after the election kind of subsides, what's going to be a little bit of their changes in terms of stances, and when we see consistency in regards to home prices. Today was a good day when we talked about the bond market. Like you guys will see, we actually saw an uptick of 26 basis points. Remember, when the bond market goes up, that necessarily means that the interest rates are going down. 10-year Treasury also dropped, which coincides directly with the interest rates. You can kind of see for a little while, really since the Fed cut, since September 17th, we've been in that negative territory. Then we took a really sharp decline. I mean, October was just terrible in terms of the bond market. Now we finally saw a little bit of a saving grace today. Hopefully we can continue riding that wave and continue breaking over that ceiling of what we really want to. Okay. You guys can kind of see here, interest rates, we were kind of slowly dipping. At one point, we really kind of met where we were basically less than almost 4 months ago. Today was finally a little bit of a breathing room of a day. Hopefully tomorrow will be too. And then again, we'll see a little bit of indication after tomorrow in terms of the elections and also in terms of the Fed meeting. And then we'll kind of get at least some insight as to what is going to be the plan for the Federal Reserve. Are they going to indeed cut? Are they going to give us at least just some inclination in regards to little bit more insight? Is the Fed finally motivated to cut interest rates, and what are the necessary things that we need to do in order to implement those stuff? So I'll keep you guys updated. As always, I appreciate you guys jumping on. So any questions that you guys have, of course, visit our website, gotmortgages.com. Thanks, guys. Catch you guys soon.